Howdy friends, thanks for joining us for this month's update on our livestock markets. I'm Coulter Brown from the Northern Ag Network. It seems like once we get past one challenge in the cattle business, another pops up to take its place. Cattle prices aren't really the problem right now. They're some of the highest we've reported in years, but costs are just jumping higher almost exponentially, and it's taken a big bite out of the profits that would otherwise be there. Of course, a lot of producers are still fighting drought right now, and others still over the past months fought record flooding. A lot of challenges, but today we're going to talk about some of the factors that could point towards cattle prices moving higher still. We're going to talk about contraction in the beef cow herd. We'll look at the current dynamics in the cattle feeding sector that are looking a bit more positive, and the expansion in processing capacity that we're seeing. Then we'll wrap up by discussing the first round of video sales for the summer. Starting out though, let's thank the sponsors of our report. You may have heard me talking on radio about locking in prices for calves with LRP. If you want to learn more about that, reach out to AgRisk advisors. You'll find that they're easy people to work with, you'll like them, and you'll learn something. Well, commercial beef cow slaughter in the month of May was the highest it had been since 1996. However, CattleFax says that doesn't necessarily mean that we've seen the peak in culling as drought impacts such a wide swath of the country. And then coupling that with the economic headwinds, and CattleFax says we may have another 2 years before the industry switches into an expansion phase. However, given the strong demand we're seeing for ground beef and dairy cow slaughter that's down due to high milk prices, cull cow values are performing very well. Across the region, we're seeing a lot of cows selling from the mid-80s up into the low 90s. And it is difficult to say exactly how many cows have left the country. If we look at some of the data, that suggests 10 to 15%, but anecdotally and more specific to areas hit harder by drought, particularly in northern Montana, we're hearing figures like 30 to 40%. Now, over the past month, the northern plains have seen more moisture, but drought is still a serious issue, and it is causing more producers to sell cow-calf pairs. But for the areas that have found the moisture, there is desire to rebuild, and we're seeing strong demand for those pairs. Young pairs across the region selling a lot from $2,000 to $2,500, topping out at $3,450, and even mid-age pairs selling from $1,800 to $2,100. Cattle futures did perform better than expected in the month of June. Both feeders and live cattle moving higher over the course of the month, with feeders finding more support from lower corn prices. The June 1 cattle on feed inventory, though, was record large for the month, although we are seeing feeding cattle supplies, that is, moving lower seasonally, and placements are finally under year-ago levels. Given that overall cattle numbers have declined since 2019, it's a bit perplexing as to why we're seeing that record on-feed inventory, but there have been a lot of disruptions over the last couple of years. You look at what COVID did to the feeding sector, it pushed a lot of production out of 2020 and into 21, and now we're seeing more heifers pushed into the feeding sector, a lot of that due to drought. In 2015, 7.3 million heifers were slaughtered. Last year, that was 9.8 million, and that's up 3% year to date. Also, we're seeing more lightweight cattle placed into feed yards, and they end up on feed for more days, so that kind of inflates that cattle on feed figure. It is going to take some time to work through that inventory of cattle feeding supplies, but Oklahoma State livestock economist Darrell Peel says we're going to see a significant pullback in numbers over the next several months, and hopefully that'll turn more leverage over to cattle producers. Helping to work through those fed cattle numbers are an aggressive processing pace by packers over the past several weeks. We've seen some of the biggest daily cattle slaughter numbers since 2013, and that's keeping packers active in the cash market. Really, with these high feed costs, cattle aren't staying on feed as long, so packers are chasing quality grades, and that's created a wide spread in cash cattle with a definite premium in the north. And much has been made about expanding processing capacity in the last 2 years. CattleFax says by the end of the year, we'll have seen a 2,000 head per day increase in processing capacity, with from 2024 to 25, that going up to 4,000 head per day. Now, much more than that is planned. You might have heard about the packing plant in Rapid City that's planned to go in. It'd be the largest in the country at 8,000 head per day. Not every one of those facilities is going to get completed, but even at a 50% completion rate, that makes a big difference, especially with cattle supplies falling. And we are processing more head in small local plants. Compared to pre-COVID, we're talking 3,200 more head per week for a total of 13,000. So that's making a difference for both producers and consumers. And we were pretty uncertain out of what we'd see in the video sales this summer with these high feed costs, inflation concerns, the war in Ukraine, a lot of uncertainty, but boy, we were pleasantly surprised by the Northern and Superior sales. You can see the figures on the screen there. Upper 4-weight steers in the Superior sale brought $215 to $221. 5 and 6 weights in both sales, averaging right at $2, and 7-weight steers $193 to $206. Now, we have seen some demand from those feeders for the heavier cattle. They just don't want to feed them as long. But CattleFax says that we're likely to see less of a drop in these calf prices in the fall, and that's primarily due to the decreased supply. They're saying those prices won't come down as hard as they normally do. Analyst Dwayne Lenz told me that he's projecting calf prices to push even higher above the record set in 2013 and 14 over the next few years. Now, the challenge there is that profitability isn't necessarily going to be higher with these increased costs. I'm pretty concerned about fuel prices and what that means for freight costs, both for feed and getting cattle moved. Then you add in the recession concerns and inflation, and there are some risks and headwinds in this industry, but I'm bullish on the direction we're headed and hopeful that over the next 2 to 3 years, we'll see cattle producers in the driver's seat of this industry. Well, thanks so much for joining us for this month's report. Have a great day.